the metals, let's see gold. And what we have here is just really very clear. So we have a longer dominant cycle, which is then broken up into these minor thirds that you see at the bottom. If we go ahead and zoom in, you'll see that this longer cycle is clearly pushing on the upside. And then we were actually looking for a pullback on this minor third. That's this sell-off here. We were looking for this zone to hold from 1840 to around 1795 or so on the weekly. It did hold perfectly. There was a low that was due 220 to 43. We clearly formed a low inside of that overall timing, and some of the evidence favors likely meaningfully higher prices here. We have this old high at 1975.20. We have this old high right here at around 2000. So that would be our nearest upside targets here in gold. If we go ahead and shift over to the daily chart, you'll see what's happening here. Now, this is a slightly early low, so we have modified this to a 40 bar dominant cycle and a 20 bar minor cycle, just to indicate the likelihood of a slightly early short-term low on the failure of multiple regional banks, as we highlighted in the opener. So at this point, we are in a short-term rising phase, and what we're looking for is just modest pullbacks to then set up higher. That's really what we see as the highest odds. There is now a firmly bullish slim ribbon, so some of the evidence favors a long side bias and just looking for small dips to then set up a move back to the upside. These zones are rising, but they come in 1889 to 1860 or so, and we need to hold above this low at 1813.40 to really keep things positive. And as I said earlier, there are good odds of moving through these old highs at 1975.20, which is the old cycle high.